Hey everyone, imagine you're about to embark on the adventure of your life, investing in stocks, but you're staring at this crazy chart that looks like a roller coaster drawn by a caffeinated squirrel. Sound familiar? If you're a total beginner in 2026, wondering how to read a stock without feeling overwhelmed, you're in the right place. In the next 13 minutes, I'll break it down super simply, just like decoding a secret map. Stick around. By the end, you'll feel like a stock reading pro. Hit that like button if you're excited, and let's jump in. Section 1. What is a stock chart and how to read it? Okay, first things first. What even is a stock chart? Think of it like the heartbeat monitor of a company. It's a visual story showing how a stock's price has changed over time, and it's your best friend for spotting trends. In 2026, with all the AI trading apps, these charts are everywhere. On your phone, smartwatch, even AR glasses. But the basics haven't changed. Let me pull up a simple example. Basic line chart of a stock like AAPL. See this squiggly line? That's the stock price plotted over time. The bottom axis is time. Could be days, weeks, months, or years. The side axis is price. How much one share costs. Now, how do you read it? Start at the left and follow the line right. If it's going up, yay, the stock's price is rising, like a happy climb up a hill. Down, maybe due to bad news or market dips. Flat, boring, but stable. But wait, there's more. Most charts aren't just lines, they're candlesticks. Each candle is like a mini story for a day or week. The body shows the open and close prices, green if it closed higher, red if lower. The wicks are the highs and lows. Think of them as the stock's mood swings during the period. Pro tip for beginners, look for patterns. An uptrend is like stairs going up. Higher highs and lows. Downtrend, stairs down. Support levels are like floors the price bounces off. Resistance like ceilings it struggles to break. In 2026, add volume bars at the bottom. Those gray bars show how many shares traded. High volume on an up day, strong interest. And don't forget moving averages. Smooth lines over the chaos like a trend highlighter. A 50-day average crossing above a 200-day golden cross, potential buy signal. See, it's not rocket science. It's like reading a comic book. Practice on free apps like TradingView. Got questions? Drop them in the comments. Section 2. Explaining key metrics. All right, now that you've got the chart down, let's talk about those numbers next to the stock ticker. The real juicy basics. These tell you if a stock is a hidden gem or a dud. We'll cover market cap, P/E ratio, dividend yield, and 52-week range. Super simple, I promise. Like checking a car's specs before buying. First up, market cap. This is the total value of the company if you bought every single share. Calculated as share price times total shares outstanding. Why care? It sizes up the company. Small cap, under $2 billion, are like speedy startups, risky but high reward. Mid cap, $2 billion to $10 billion, are balanced adventurers. Large cap, over $10 billion like Apple or Tesla in 2026, are stable giants, less volatile. Think of it as the company's weight class in the stock market ring. In 2026, with crypto integrations, some caps include tokenized assets, but basics rule. Next, price to earnings. This is how much you're paying for each dollar of profit the company makes. Formula, stock price divided by earnings per share. Low P/E, like under 15. Maybe undervalued. A bargain, high, like over 30. Growth stock, betting on future profits, but risky if hype fades. Average for S&P 500 in 2026 is around 25, thanks to tech booms. It's like judging if a pizza is worth the price based on toppings. Don't overpay for sizzle without steak. Then, dividend yield. If you love passive income, this is your vibe. It's the annual dividend payment divided by stock price as a percentage. Dividends are like cash gifts from profitable companies. Think utilities or banks. High yield over 4%, income machine, low or zero, growth-focused, reinvesting profits. In 2026, with sustainable investing, look for green dividends from eco stocks. But watch out, super high yields might signal trouble, like a sinking ship paying out to attract sailors. Last but key, 52-week range. This shows the highest and lowest prices the stock hit in the last year. Why? If it's near the 52-week high, momentum strong, party time. Near low, maybe a dip to buy or red flag. In volatile 2026 markets with AI predictions, use it to gauge if it's on sale compared to history. There you have it. These 4 metrics plus the chart give you 80% of what beginners need. Mix them. Big market cap with low P/E and solid yield, stable pick. Practice on stocks like your fave brands. We just decoded stock reading like pros. Remember, start with the chart story, then check market cap for size, P/E for value, dividend yield for income, and 52-week range for timing. In 2026, tools are smarter, but basics win. If this helped, smash that like button, subscribe for more beginner investing tips, and turn on notifications.